Hey, everybody, and welcome to the Virtual Finance Expo. We're so happy to have you at this webinar session. My name is Rachel McIntosh, and I'm a cryptocurrency journalist and podcast host at Finance Magnates, and I'm going to be the moderator of this panel entitled Refocusing the Crypto Industry's Vision Post-Corona, New Priorities and New Strategies for Adoption. I am so excited to have here with me today some of the finest people in the crypto industry, leading experts, Ilan Sturck, the VP of Trading and Capital Markets at Orbs Group, Miko Matsumura, co-founder at Evercoin, Gong, the VP of Binance Futures, and we may be joined a bit later by Kadan Stadelmann, who's having some technical difficulties at the moment. So our discussion today is going to focus around the big topic of the moment, the impact of COVID-19 on the future of the cryptocurrency industry. So in many ways, the spread of the coronavirus has set this giant reset button on the global society. And this has caused a lot of decisions and a lot of innovation to have happened very quickly. We've had the opportunity to rebuild some of our systems and our traditions from the ground up almost instantaneously, and we will continue to have that opportunity moving forward. So over the last several years, the cryptocurrency world has sort of been developing in the background of mainstream society. And now in this post-corona era, we are wondering, is this the time for crypto to really shine? And on top of that, what kinds of new use cases have been born out of the coronavirus crisis? How has the cryptocurrency industry's ethical responsibility been reshaped, and what will the future look like? So before we get into that, just one quick housekeeping thing. We'd love to hear from you during today's presentation, so please leave your comments next to the video and tell us your thoughts and questions. We'll be answering questions from the audience at the end of this session, and if we don't get to your question during today's webinar, we'll be sure to follow up with you afterwards as best as we can. So without any further ado, I'm going to ask each of my panelists to briefly introduce themselves a little more thoroughly than I've introduced them, and we'll start with Miko Matsumura.
Great. Hi, as you heard, my name is Miko, and I'm actually a co-founder with a non-custodial wallet exchange called Evercoin. I also am a general partner with Gumi Crypto's Capital, which is a venture capital investment fund focused on blockchain technology. So that's me.
Great, and Ilan, yes.
Yeah, hi, good morning, afternoon, or night to everyone, to our audience around the globe. I'm Ilan and I work at Orbs, the largest blockchain crypto firm in Israel. Orbs developed a hybrid blockchain that has been live since April 2019. I'm a 20-year veteran of the global securities market and FX. I managed several trading desks at leading Israeli and American financial institutions. At Orbs, I'm responsible for the digital asset trading and the group's investments in digital assets and fiat, and also taking care of aspects relating to the Orbs token.
Thank you, Ilan. And Aaron.
Hi, everyone. My name is Gong. I'm currently looking after futures business at Binance. We've launched a product since September last year, and right now, it's one of the largest derivatives exchange in the world, according to various ranking sites. I'm glad to be here to be part of the group to discuss various topics here. So yeah, glad to be here. Thanks.
Glad to have you, Aaron. Thank you. So I'd like to address this first question to all of the panelists, but we'll start with Ilan for logistical reasons. So if you had to choose maybe one big theme or one primary way that the coronavirus has changed the public perception of cryptocurrency, what would that be?
I think that the stimulus packages, monetary and fiscal, that the central banks and the governments implemented have raised concerns that this can lead to inflation and to weaken currencies. This possible outcome strengthens the positioning of cryptocurrencies as a hedging mechanism against currency debasement and inflation. Hedge fund manager Paul Tudor revealed recently that he acquired between 1% to 2% of his assets in Bitcoin because he thinks that modern government-backed currency will diminish in value over time, and Bitcoin is not subject to the whims of government spending. And he also mentioned that we might witness the historic bursting of store value. I believe that the lockdown situation caused by the COVID-19 pandemic accelerated the discussions by governments whether they should implement a CBDC, central bank digital currency, in which their citizens can buy and sell goods or pay bills digitally. CBDCs have also been discussed as a way to improve stimulus distribution. Sweden, China, and Uruguay are examples of countries who are progressing with their analysis of digital currencies. France, for example, recently announced its first successful test of a digital euro. England, for example, has started doing research on the impact of issuing digital currency. And they think that digital sterling will provide their citizens an asset that is not risky like cash, and an asset which is very easy to use and fast like electronic payment. And if CBDCs are successfully launched, the infrastructure and education that would accompany the use of these assets could serve as a gateway for further adoption of Bitcoin and other digital currencies. Mm-hmm. I would like to mention a little bit about the US now. The coronavirus is accelerating discussion now about digitizing the dollar. Fear of contagion has made handling physical cash less desirable. And the digital dollar is meant to be a transferable digital token that is the legal equivalent of cash. The dollars will be issued by the government and backed by full faith and credit of the United States Treasury. And there is no reason why a centralized digital currency would be issued and maintained by a public entity such as the Department of Treasury, which today produces paper dollars. And unlike decentralized cryptocurrencies, centralized CBDC can be backed by fiat currencies, and they don't require mining to create new currency and can be pegged to currencies such as the US dollars. So each unit could be backed simply by the full faith and credit of the issuing government, rather than balances held in commercial banks. And the issuing government could choose to use the power to create digital money as a direct means of stimulating the economy and offering emergency support to individuals in a crisis like the coronavirus. I think that the CBDC will evolve something that could push the cryptocurrencies forward.
Absolutely. So Aaron, do you see CBDCs as a possible way that that could bring more mainstream people into cryptocurrency, or do you think that there's another angle that sort of the general public is being introduced to cryptocurrency at this point?
Well, I think given the fact that this has been a very challenging year due to the COVID-19, we've seen a lot of quantitative easing policies have been introduced by various governments, which let more and more people think about, okay, what are the value of Bitcoin, right? So because Bitcoin numbers are limited, so the strength of Bitcoin's perception as a store of value for public and civic investors have been strengthened. And as such, there's a great awareness of the end of and to the end users for them to have better access and the freedom of the money, and to promote more discussions around the role of the crypto. I think it's been positive for the crypto space.
Yeah, nice to hear. Miko, what are your thoughts on this question?
Yes, I really felt like what we've gotten so far is quite a pitch perfect view of the macro. So I won't add any thing on that. What I did want to amend is just a little bit of a perspective on central bank digital currencies. I was on a digital panel this afternoon at the Boston Blockchain Association virtual summit. We were talking about CBDC, and one of the big distinctions that exists really is thinking about this from the perspective of the bank to bank, or obviously going all the way to bank to consumer. So whether we're talking about the wholesale or retail segment of the CBDC, so it seems more probable that the early rollouts will have a stronger impact on the wholesale central bank to bank side of the house. So I think as a kind of an adoption vector, I do think that there is sort of a psychological or sentiment effect, when a central bank, even if it is wholesale. But I would say that, we don't want to overly conflate the timeline for end users to be getting CBDCs kind of in their digital wallets. So, it's that part is perhaps a little bit more ambiguous, especially since the devices, the software, like it certainly hasn't all been sorted out by any country as yet. But from my perspective, the war on cash is a big deal. Money printing is a big deal. Abe in Japan just announced another $1 trillion add to the Bank of Japan's balance sheet in order to promote an additional stimulus that involves sending checks to frontline healthcare workers, as well as general support to the economy. So what we're seeing across lots of countries is very much in line with what's already been said. So I think the only thing I'd like to kind of add as a sort of a different take is that there's a geopolitical aspect, right? Which is that I think that what we're actually headed for is a state of even heightened dissatisfaction. So at the Barcelona conference that you hosted, I was talking about the extraction economy, where AIs are extracting people's attention, they're extracting the value of their labor. And in fact, if you look at automation, robotics, and AI, right, really all that's happened with COVID is that the future has been accelerated. So really, it's like we're going on two tracks, and we've been given a strong whack, and it's sort of sent us down sort of the more futuristic track. But in the futuristic track, I think the jobs that people lost will probably not come back. And I think that's really a seismic shift. And I think that those are the types of things that need to be significantly addressed, because of the kind of extremely high level of discontent among people in most countries. Just about any country you can name, there's a high degree of discontent. So I think and a decreased amount of trust. So I think that's a pretty significant sentiment vector.
Yeah, absolutely. It is funny that you were talking about this idea of the extraction economy, and I recommend anybody to go and look up that keynote last year, because it was so great. And yeah, now that we've kind of been pushed in this direction, exactly. So I want to switch gears a little bit and talk about how the economic fallout from the coronavirus has directly impacted the financial aspect of the cryptocurrency world. So Aaron, I'm going to direct this question to you. So how have the economic changes that have resulted from the coronavirus reshaped the cryptocurrency futures market specifically?
Well, so as I previously mentioned, this year has been a very challenging year, and Wednesday, the WHO officially announced that this COVID-19 was a pandemic. Then it caused tremendous of liquidity issues, starting from the stock market, and then it was shifted to the commodity market, and the crude oil price went all the way to negative, and as such also affected the crypto market as well. And when we had an interview in last month, we were talking about March 12th, right? So the price dropped almost 40% all the way to 3,000 for Bitcoin in one single day. And this kind of volatility were never been seen in the entire history. And it creates lots of volume and also turnovers across all the crypto exchanges. And we've seen lots of exchanges and the issues of system outage, system glitches, or even a rollback. So it was a very challenging, critical moment for exchange to be able to cope with these kind of volatilities and keep performing as usual as previously. Because once in this crypto time, the users were not able to get out their position or capture these opportunities, the exchanges will lose the credibilities to attract this kind of users. But on contracts, the Binance futures have been doing pretty well. It has been proven in many times since we launched. And as such, we gained strong credibilities and trust from the users. When there's a big market movement, the users would like to offload their position or offload their volume to our exchange. So that kind of a critical moment has reset the market landscape in some degree. And as such, it was also a critical moment for Binance Futures. So we start to gain more and more momentum and become one of the largest exchanges.
Yeah, absolutely. And there was also some sort of infrastructural failures, particularly on Black Thursday, this big March 12th event. So do you think that those infrastructural failures, these outages that have resulted from the coronavirus, have contributed at all to the reorganization of the futures market?
Well, I think in the long term, the futures market has helped to stabilize the market because if we think about this way, without the futures market, if users want to sell, then they will just sell their position in spot market, which will cause more crashes in the market. But in contrast, once people are using derivative market, they can enter into an opposite position on the futures market without actually selling their spot market. So I do see the derivative market has been playing a very important role to stabilize the market.
Okay, I see. And Miko, I wanted to direct this question to you also, from a cryptocurrency exchange perspective, since you're the co-founder of Evercoin. So how has the coronavirus affected trading behaviors on cryptocurrency exchanges?
Yeah, one of the things that we are seeing that I think is really notable and perhaps interesting signal, and I think it may be related to also futures as well. But if you look at the total amount of Bitcoin that's actually being held in custody, in custodial and centralized exchanges, it's actually it's quite low, and this actually also is a potentially positive signal for the broader market. Because what really, when you see kind of large amounts of Bitcoin moving onto exchanges, that implies a sell sentiment, especially when you think about things like whale action, right? So there are people who have, like in cold storage, very, very large reserves of Bitcoin. So the fact that we're seeing a smaller total quantity of Bitcoin on the centralized exchange model, I think that's a favorable sign for the Bitcoin economy as a whole. From the perspective of a non-custodial exchange player, we're definitely seeing that movement as well. So we're seeing more people bringing cryptographic tokens under their own custody, just as a trend towards kind of what I would call the HODL vector, right? Which is that there's sort of these two vectors. I jokingly call that one sort of 10-year moving average, as opposed to kind of this sort of more whale driven kind of monthly kind of channel play between, currently between like, sub 10,000 down to maybe 6,000. There's sort of a channel, right? But I think that's really whale action. And I think the thing to really look at is how people in the HODL action are kind of ratcheting the floor, right? Because what you see is you do see wallets that collect and they never sell, which is pretty interesting.
Right.
And that tends to be more cold wallets. That tends to be more kind of self custody and kind of whale action in the long skein of things.
Right. So I mean, I guess kind of on the same turn, if there are more people buying cryptocurrency and putting it into cold storage, Bitcoin specifically, have you also seen, maybe more users on cryptocurrency exchange that you're a part of, or have you noticed any trends in general to that effect?
It's just on our end, on the Evercoin end, since we're non-custodial, and plus we also have a hardware component, we definitely are seeing an increase. So we're seeing, people bringing Bitcoins, into sort of a colder storage or into kind of self-custody. And I think that, it to me, the thing that's exciting as well is you're also seeing more sophistication, right? So you're also seeing increases in futures. And I think that you're also seeing kind of a segmentation of the market, so I don't think it necessarily has an effect on the prospects of like a futures trading exchange. I think I think these phenomenon are kind of very easily separable. So I think both of them can do exceedingly well.
Okay. Right. Yeah. And Alan, I want to switch gears a little bit. So as we know, in addition to the coronavirus and the quarantines and everything that has happened over the past 3 months, we also had a big event for Bitcoin earlier this month with the halving. So, but I want to ask you your opinion. So, do you think that in terms of public awareness for cryptocurrency, was the halving or the price movements that happened as a result of the pandemic, when you compare those two things, what was a bigger event for cryptocurrency in terms of public awareness?
Although the halving was well discussed in the media, I think that the price movement that happened during the pandemic was bigger than that. Since the launch of Bitcoin in 2009, there has not been a global economic crisis. As such, there has not been a previous chance to see the impact of a crisis on the Bitcoin. Many people thought that Bitcoin will be a safe haven during crisis and will attract those who want to keep their money safe. But I think that the Corona crisis showed us the exact opposite. We see that there was some correlation between the traditional market and the Bitcoin. When the pandemic started, Bitcoin dropped by more than 50% from the beginning of March until mid-March, while the S&P 500 dropped by 30%. Since then, whenever the traditional market calmed down, Bitcoin recovered 100%, while the S&P was up by more than 30%. So during the crisis, you would have expected to see some more resilience in the Bitcoin. Gold, on the other hand, which is considered as a safe haven asset against stock volatility and inflation, was up and down 5%, but then declined 10%, and since mid-March is up around 15%. And I think that Bitcoin is still in the early stages of adoption by the public, and so it's unreasonable to expect that once there is a crisis in the stock market or economic crisis, people will start mass buying Bitcoin, as it's not a simple way to buy this type of assets. You need an account in one of the exchanges and a ledger to store the asset if you want full security. You can always buy an ETP exchange traded product, but the GBTC, for example, in the US, trades in a premium of 20% to its net asset value. So I conclude this, I think that the big decline in the Bitcoin price at the beginning of the crisis took many people by surprise.
Right, absolutely. And of course, whenever we have these big price movements in Bitcoin, the whole world outside of the cryptocurrency space, and even inside of the cryptocurrency space, starts talking about market manipulation. So, Aaron, I want to direct this question to you. Do you think that the economic changes that have resulted from the coronavirus have contributed in some way to market manipulation, or maybe influenced market manipulation, and how so? And, kind of to the same end, is it still a problem? Is it more of a problem than it was previously? Has it changed in any way?
Okay, sure. So I've previously mentioned actually the benefits of having derivative market is to stabilize the market, right? But if we look at this data right now, the current crypto derivative market size is around 2.5 to 3x of the underlying spot market. This ratio is still much smaller than the traditional market. When we look at the traditional market, this ratio can be from 10x all the way to 100x. So there's still a large room for this gap to close in order to further stabilize the market. And secondly, I think the difference between this COVID-19 compared to the previous pandemic or crisis is the impact on the liquidity, right? So with the lockdown, business couldn't run and customers couldn't couldn't shop or go out. So it's this scale of liquidity problem has contributed to the volatilities which you've been mentioned several times of this panel, and started from the stock market and also the commodity market, and eventually it made an impact to the crypto market. But people want to access to liquidity, and with this, but on the positive side, once we've seen the price crash to almost 3,000 on March 12th. But now we've seen the recovery as well. The price went up all the way now at 9,500. So it means that the increased attention from the investors and more adoptions from the user cases. So which actually bringing more liquidity to the crypto market. For exchange, we must to be able to cope with this kind of system stabilities, and also make sure we've got enough liquidity to prevent any kind of market manipulation, and also especially on the core product design perspective, we have to make sure we've got the right design product. I'll give you an example. For our liquidation mechanisms, we are using mark price to trigger liquidations instead of last traded price. So even though the clients are able to manipulate the last traded price, it will still not be able to affect the interest of the clients. So this kind of measures are very important in order to protect the user's best interests. And at Binance, we also look at these issues holistically. And we've got internal compliance and ethical values training, which is still instilled in us. We abide by the local regulations and have measures to make sure we've got the best interests of the clients protected. And secondly, as I mentioned, we've got the exchange built to specifically address these questions and the problems. And we've got another example, besides the product design itself, and we use our actions to protect the users. I'll give you another example. When we had the interview last time, we just ended $7.5 million to our insurance funds, right? So, and after another dip on May 10th, we ended another $30 million into our insurance funds, which was our intention to protect the best interests from the volatilities. That was before the halving. And maybe because the price was already priced in and we didn't have that much price movements during the halving period and even after that, but we used our actions to protect the users. So the crypto market as a whole has been constantly developing, and we can now better discern the good research and reporting, such as by finance and magnates, to help everyone understand the industry-wide issues, such as manipulation and also misrepresentation.
Right. And Miko, I also want to ask you from from an exchange perspective. Have you seen any changes or trends in market manipulation, that have come as a result of the of the coronavirus pandemic?
Yeah, I mean, obviously we did see that big price action pretty early on. And, I think the thing that is important to understand is that, the cryptocurrency exchange infrastructure globally doesn't actually have necessarily either the full kind of maturation of the user base, nor does it necessarily have the kind of technology instrumentation that we're typically used to in traditional financial markets, things like circuit breakers. I do think that there continues to be sort of inter-exchange complexity. So, obviously in some of the larger exchanges, it's a little bit harder to do, but I think in some of the smaller exchanges, there may be liquidity where you can create sort of local problems and you can create local price action that I think is potentially problematic, right? And you can also kind of generate arbitrage opportunities by doing kind of bulk sale on maybe a smaller exchange just to create a local spike of price, right? Because what you don't have is you don't have like really strong coordination across exchanges, with respect to kind of, migration of liquidity and, so I think arbitrage still exists. There's still kind of funny money flying around, and I think that it's an imperfect world. I think one of the systemic vulnerabilities that was discussed in my advanced crypto asset trading group actually was USDT or Tether. So, there's a little bit of opacity there, and I think there's a little bit of discomfort with respect to kind of whether that stable coin has sufficient asset reserve. And I think the intransparency is something that the community is uncomfortable with.
Right. Yeah. And Ilan, I also want to ask you, because you recently conducted some research on Bitcoin price manipulation. And can you tell us a little bit about that research and what your findings were?
Sure. I'm going to publish it in the next few weeks. But for a long period, I've seen a specific pattern showing Bitcoin is very volatile during specific time frames in a day, but not every day, and sometimes during the day. So I conducted research and collected volume data on BTC prices from tier 1 exchanges, regulated and unregulated, and also futures and options from different exchanges. I've also analyzed long-short ratio, open positions in BTC futures and options, and some other data. I analyzed the cases in which Bitcoin was up or down at least 4% within minutes on high volumes. I found that in all cases, thousands of Bitcoin were bought or sold within minutes, although there is not enough liquidity in the exchanges to contain such volumes.
Yep.
The volume in each pump or dump was higher by up to 10 times or more than the average in the exchange. So the outcome was sharp increase or decline in BTC price. So why would someone sell amounts that range from 5,000 to 20,000 Bitcoin within minutes? I found that on the other side, the number of futures and options increased sharply as well. And it seems that there is a connection between the three assets. In my analysis, I found that many times there is an increase in future positions before the dump or the dump. My guess is that traders sell the BTC spot at a loss, but on the other hand, make huge profits in derivatives such as options, long put for sharp decrease or long calls for sharp increase, and futures, short position or long position, as you can use a leverage of up to 125 times in some exchanges. Anyone who holds such large amounts of Bitcoin are very sophisticated, and if these transactions were legit, they would go to an OTC broker to buy or sell such significant amounts. The transaction would cost 10 to 50 basis points, depending on the amount, and would be executed in a TWAP algorithm, for example. So the transactions won't impact on the market at the same magnitude. For example, on the 12th of March, the Bitcoin was down 17%. Everyone remember it, within minutes, and a few hours later was down by another 40% on very high volumes. A few days before the flash crash, coins were moved from private wallet to exchanges, exponentially higher than usual. So again, is it possible to say high amount of Bitcoin via OTC without crashing the market within the exchanges? In addition, I think that the increase in the options open interest has some connection to the pattern I found. And I believe there is a need to build more trust in the crypto space, and such manipulative patterns must disappear, and there is a need for more surveillance and governance.
Yeah, it's really crazy, actually, when you look at things like sort of traditional FinCEN action within financial markets and within kind of financial activity, right? Like there, you're filing SARS when you kind of see even kind of small amounts moving, right? Relatively small amounts, right? So to me, the thing that was astutely pointed out is that the idea that someone would actually throw that large of an order into an order book and then have like this kind of really bad price elasticity, like that's extremely stupid, right? So like nobody would do that unless, right? And so it's absolutely clear what's happening, and I think your research is fantastic. I mean, it's for sure, because of course you would either dark pool / OTC, because then you could have perfect liquidity. So like, so why would you subject yourself to that? And it's like,
I can.
it's clear you're just smashing, right? You're just smashing the exchange, and then you're getting really good benefits out of that. And by the way, one of the really interesting notions is that we're seeing this huge kind of excitement around proof of stake networks, right? But one of the things that's so interesting about staking is that all of the kind of game theoretical mathematics are really assuming that these games are closed games, right? So you can mathematically prove that it's economically disadvantageous for an actor to act against themselves. But this is one exact case where the entire playing field is actually part of an open system, right? So what you're seeing is you're actually seeing economically disadvantageous behavior, but it's only because you don't know that the actual game they're playing is a larger game, right? So, what I'm really sort of pointing out is I'm pointing out that like people who talk about sort of proof of stake systems as having kind of mathematical proofs of their consensus are missing fundamental notions about how open the world systems and world financial systems are, right? So I 100% agree. We desperately need much better regulation of this type of behavior, because if folks like us can just look into it and see that nefarious activities are occurring, it just seems like the regulators need to actually have a view on this as well.
Yeah, absolutely. Aaron, do you want to comment on that as well, especially coming from a futures perspective, about the role of regulators in this kind of a space? Where are regulators falling short?
Before I joined the Binance, I was with CME, right? So back to the days when CME launched the Bitcoin futures, and which was one of the first regulated exchanges that launched this product. So my general feeling was that the regulator were divided by two segments. First one is the derivatives part, and the second one is the cash part. So for CFTC, they are pretty open and also innovative in terms giving the green lines to exchanges such as CME, CBOE, and also ICE, BAKKT, right? So the products actually launched on CME was pretty successful, and after they launched Bitcoin futures, and then earlier this year they also launched Bitcoin options, right? So I think in the long run, both regulators and the exchanges are in very dispensable positions. We need each other. And actually, the regulators will benefit the entire derivatives ecosystem.
Right. Thank you, Aaron. So we're going to take some questions from the audience. We've got some questions coming in now. So I want to direct this toward Elon Sturck at first, but as always, feel free to jump in at any point. So Elon, are we headed toward a cashless society, and will cryptocurrency be a part of that?
I don't think that we are headed toward a cashless society. Although the e-payment industry evolved greatly in the last few years, I think that people will continue to use cash, but they might be more careful in proving hygiene after touching cash. At some point, we would expect to see a new vaccine that will protect from the coronavirus, and everyone will start going back to their normal routine. I think that crypto as a payment will evolve, and as we can see today, the enterprises in the US are starting to accept Bitcoin via apps like BitPay and Flexa with Nordstrom, Whole Foods, Starbucks. And as I mentioned before, I think that the CBDCs will evolve as well, which could push the cryptocurrencies forward.
Okay, yeah, and also, speaking of CBDCs and regulation, there's another question. This one I'll direct towards Miko. With regards to regulation and price manipulation, how have the cryptocurrency industry's ethical responsibilities been reshaped? Particularly after the coronavirus.
Yeah, so I would say the following, right? Which is,
Mm,
there are plenty of bad actors, in the industry, including kind of hackers, and including this kind of, fraud and things of that nature. And some of this stuff is fairly blatant. And I think a lot of us who've been in the industry a while have kind of seen a bunch of bad action. So I think
mm,
that's certainly a thing. When you talk about kind of ethical responsibilities, it's a very complex topic, right? And the thing that I think is it has to be kind of understood is that I think to me the real aspect that I think drives the my ethical compass around this is really the
mm,
culture of open source and the culture of open source software, right? Which is very much kind of consent based. So from my perspective, how has Corona affected it? In to great extent, it kind of hasn't. I think the thing continues to
mm.
do what it's always done, and I think unfortunately it has to do with money, right? Which is, money attracts certain types of people, and they're sometimes seeking gains that they don't necessarily deserve. And so I don't think that it's an easy topic, but I do think that there are reasons to be hopeful. I certainly think that the industry seems to be getting a little smaller, and it seems to be getting maybe a little more professionalized, which I think all of which seems very welcome. I think that the notion of an expanded derivatives and futures market, is a stabilizing factor, and I think it's a professionalizing factor. So I think we're going to see more more institutional rails, and I think that if you look at GBTC, obviously there's kind of a premium on GBTC, but it
Yeah.
seems to continue to grow. I think their current buy rate is about 1.5 times the rate of Bitcoin mining. So it means
Yeah.
that they're inhaling a lot of Bitcoin over there.
Yeah.
They bought for the Grayscale Bitcoin Trust. They bought 18,000 Bitcoin since the halving, while only 12,000 Bitcoin have been mined
Exactly.
Yeah.
since then. So it's yeah.
It's wild. Yeah, they're
Yeah.
the rate at which they're buying Bitcoin, it's like something like 29 million per week. I just wrote about that actually, but I'll direct this next question to Aaron. So the question is there any particular area of the world that's going to excel in cryptocurrency adoption over the next 10 years? And I know that Binance has such a huge global reach that Aaron, I think this would be a great question for you to answer.
Yeah, sure. So when you look at different regions, you can see Asia has a region adopts new technology very fast, including cryptocurrencies, and also particularly, for example, China, and they have demonstrated the adoptions to Alipay and WeChat Pay, which has provided financial service to people who are previously unbanked or underbanked, right? So
Mm-hmm.
in some other countries, such as Southeast Asia, we do see there's a gap for crypto and digital assets to fill quickly because they are still building their infrastructure systems. But the Western regions like Europe and the US are slightly different. Mature markets are looking for competitive advantage, so digital adoptions can also provide that. So
Mm-hmm.
there are definitely there are more opportunities for the adoptions of the crypto.
Absolutely. And, so the big discussion last year and to some extent this year as well has been about regulation and, the idea of all these cryptocurrency companies around the world calling for more regulation, asking regulators for more regulation and not necessarily getting it. Now that there have been some more regulatory moves been made and standards being set, do you think, it's still sort of the big problem that the cryptocurrency industry has when it's looking for new places to step into? Is it still the case that if a country or any particular jurisdiction doesn't have regulatory standards, that will be sort of avoided by cryptocurrency companies, or has have those companies found a way to operate and still be compliant without necessarily clear guidelines?
I don't think it's a direct result of COVID-19, right? Because
right.
This pandemic is a public health issue. The economic impact from COVID-19 is showing us a way to improve the economic, and the crypto and digital assets have a large role to play. I think in the long term and in the long run, government guidance and support in building more efficient and cheaper digital payment system is beneficial for the market.
Mm-hmm. Yes. Okay. And there's one last question, and I'm going to throw this out to everybody, so please feel free to jump in. So there's kind of been a lot of quick solutions that have come as a result of the coronavirus that have sort of stuck immediately, in the cryptocurrency industry and the fintech industry. So what do you think that, what would you like to see that we keep from this time? For example, this particular moment would have been, hopefully we would have been, going to events and different things, but, now we're able to connect on the Zoom platform here today. So that's just one example, but what other solutions would you like to see continue after the pandemic is over? Not everyone all at once.
I guess, go ahead.
Oh, go ahead. You go first.
So for me, one of the things that I think is really important for us in this time, and I don't know if it's increased or decreased, but to me, what's happened, it feels like systems that are more frail have been exposed, and that the exposure of those systems comes in the form of just breakdown, right? Which is that there's just some systems that were antiquated. There's some infrastructure that just was not sufficient. And what's happened with the COVID system is that it's produced stress, right? And the stress on these systems causes things to just break, right? So in a sense, what's happening is that weaker systems are being exposed, and I think that the actual consequences of that breakage are, in human terms, is terrible, right? So it's terrible.
Absolutely.
There's deaths, there's there's poverty, there's job losses, right? So I mean, it's really an awful thing, and it's not something to kind of be hopeful about. But I think that the exposure of these systems enables us to reason about solutions, and enables us to think about how we could all do better as a society. It may cause us to think about how to vote better, or it may cause us to think about how to legislate better, or it may cause us to think about how to take care of our fellow citizens better. So to me, watching things break is awful, but it's about recognizing, it's about kind of really seeing things as they are, and not having an opportunity to pretend that things are okay. So, I think we did spend a lot of time pretending that things were okay, that were just really about to fall apart, and now they just have. So I think that's something that it's a pretty negative perspective, but you have to see the brokenness before you can have the conviction and the commitment to maybe make some substantive changes and try to make things improve.
I think that you can see that all the working behavior has changed. Everyone is working from home. I think that Facebook, Google, all these giants are saying work from home. Twitter now recently said to their employees, if you want to continue from your home, keep on, and you don't need to come to the office. So I think it's really changed the way we work.
Absolutely. Aaron, do you have anything to add also?
Yeah, I think, like you said, technology is the major impact, and actually the winner of this coronavirus thing. Like what we are doing right now is through Zoom, right? So we are seeing more and more virtual conference and also decentralized working format. And from another different perspective is that we also see the wider adoption of the crypto from many of our measures. And firstly is we see, okay, when this COVID-19 happened and the Chinese central banks started to disinfect the nodes, right? So wireless payment is one of the way to avoid this social distance. And also from the blockchain technology adoption perspective, it's very easier to track transparently about the donations in terms of the masks and also other range of the materials, right? So even for Binance, we've launched the PPE token, which allow to ensure the protective masks are sent to the hospitals. And the cost was transparently recorded on the blockchain with token. So yeah, it changed the way people how to react to the work, and also basically everything. It transformed everything people used to do, and just improved them in some degrees, and they increased the adoption of the crypto and also blockchain technologies.
Yes. Okay. Well, that is the end of our discussion. We're just about out of time. I want to extend a huge word of thanks to our wonderful panelists, Miko, Ilan, and Aaron. It's been absolutely wonderful to talk to you. I think we could have a lot longer discussion if we didn't have these time constraints. To all of our audience members, thank you so much for coming. We're so happy to have you here. Thank you for your input and your questions. Please enjoy the rest of your time at the Virtual Vision Finance Expo, and we'll see you all in the future, hopefully in person. I hope so, one of these days.
I'm sure.
Thank you, guys.
Yeah, okay.
Bye-bye.
Take care.
Bye.
Thank you.
Bye-bye.
Bye.
Bye.